Today I'm going to explain few things based on candlesticks and the patterns. It's going to be a short video. Hopefully I'm not going to take too long. I know you must be enjoying your weekend and doing your leisure activities, but let's just if you can spend some time watching this video, it's going to help you a lot. So as you know, Thursday we had the NFP, and there was a lot of volatility in the market. Of course, there was some reversal also with certain assets, but the trend continued, and we had a lot of ITMs that day. I had a webinar on the NFP, and we had a lot of ITMs, and even after the NFP I gave about 4 or 5 ITM signals during the webinar itself, post news, and basically that was on the candlestick patterns, and I was explaining few things to the members about when to detect a reversal, and how the candlesticks tell you or give you information of what's going to happen in the future. So let's get started. As you all know that I follow price action. I have support and resistances, and I draw them based on where the price has touched at least 2 times or 3 times. I go back a little and I look where the price has stopped and kind of reversed back. So this is my resistance, and this was my support, which was broken. So this became my resistance, and now this is my support. So people ask me this question: how do you know that there's going to be a reversal? And I tell them that when you watch the resistance point, when the price has touched the resistance and it's coming down, there's a confirmation that the price will stay down for some time. Now, to add another confirmation to that, what helps a lot is the candlesticks. So observing the candlesticks themselves. Now I'm on a 15-minute chart on USD JPY. The price basically, okay, this is the resistance point. The price has touched here, right? And I know that the price is going to reverse, but there might be a possibility where the price might just continue up further, right? So this candle for me is the confirmation on top of the resistance. So this is the resistance. This is a good confirmation that the price most likely will reverse from this point. But there is also a possibility that the price might continue further. So to double confirm, we have this candlestick. The green candlestick almost looks like a doji. Well, it is a doji, but it has a longer wick on top. So let's just call this a doji also, right? This is a doji. Now doji indicate there's a reversal happening. So we wait for this candle to if you're unsure, if you're unsure that the price might continue back up further, you don't want to take a 50-50 chance. So you want to wait, and you want to see where this candle ends. So this forms a doji, right? And the price ends over here. 123.148 was the last. It closed at 148. So the price closed here. We see a doji, and the next candle opens as a green, as a red. I'm sorry, as a red. So which means that the reversal is in favor of the bearish. So the resistance is maintained, right? The price is going to come down further for another 15 minutes. So 15 and even 30 minutes, this would be a winning signal. Now let's see how many times this thing, this candlestick patterns actually help us to confirm. Now you have to remember, guys, that the most important candlesticks that you have to observe are these. So long wicks or shadows, small bodies, right? Or something like this. Look at here. So long wicks and a shorter body, even a smaller body, does not matter. So this means that there's a reversal happening. Either the price is going to go down or stay up. So wait for the next candle to open. It opens above this body. Look at here. This candle almost opened on the same level. Opened at 148, right? The previous closed at 148. The next one opened at 148, but it continued to stay down further. So which means that there is an indication. So when I post a signal and I say, guys, take a put at 123 point, I'd say 150, because sometimes 1 or 2 pips might go higher and then it'll come down. But if I give you 150 or 148 and you see the price is dropping already, you might still want to take this signal by, say, 2 pips or 3 pips. You might win big because there's a resistance point here, there's a confirmation of this candlestick, and the price is coming down, right? Same way over here too. So right here, this green candle, again, long shadows, relatively smaller body, not as small as this, but it's kind of big, but still. In the next candle, next 15 minutes, ITM. Even the next 30 minutes, if you catch the SR over here, it's ITM. Now let's see if this continues. Now look at here again. This is a support, right? Why is this a support? I go back. Now see, this is all I know. So if I'm trading in this time frame, right? This is my window. That's it. Now this is support here, but that support is now broken off. It's come back up, but it's staying down. Now I don't know where this is going to stop. So I go back and I check where there is a chance for the price to bounce back. Now look, very interesting. Look how many times the price has touched here. 1, 2, 3, 4, right? So this can be a support for me. So I go back all the way and I draw a line over here. So this becomes my support. Now I know that there's a chance that the price might bounce off from this area, right? So this downtrend might reverse and come back up. Now how would I know? How would I confirm? We had this red candle touched here. If I took a call signal here, if I didn't get a proper SR, now I drew my line over here, right? And if I gave you a higher SR, you would have barely made it. Maybe some of you would have ITM'd or some OTM'd. But if I gave you an SR after this candle closed, now this candle again is almost like a inverted hammer. To explain what hammer is, a hammer is something like okay, let's go to, I think I have one in USD CAD. Yeah, a hanging man or a hammer. This is the hammer, the red candle over here. See, this is the hammer. So this is almost like an inverted hammer. So it's upside down, even though it has a wick. It's still a hammer, which means that there's a reversal happening. So the next 15 minutes or the next 30 minutes, you can ITM this signal. So always remember that if you see this kind of patterns, these candlesticks, like somewhere in the middle, right? Not on resistance and support, but somewhere in the middle. Like for example, over here, look at this red. This is almost like a doji, but this does not say anything because look where it is. It's neither on a support, no resistance, nothing. So this is a very, so you might look where the next candle ended, right? So if you took a put thinking there's a reversal happening because this is a doji, you might be very close. Maybe this would be OTM if you didn't take a good SR. So we always check for support and resistances. This is where the price bounces off. So, and to double confirm that, we have these candlesticks. Now going back, let's look at some more. So we said dojis are where the price, the opening and the closing is almost at the same price, or something like this where there's a long wick and a relatively smaller body, or an inverted hammer such as this, or there are so many reversal candlestick patterns, but I'm giving you the most important ones. It's hard to memorize all of them, so go for the most important ones. I mean, if you see like long wicks, now look at here again. This is a dragonfly doji. I'm gonna zoom in a little bit. Yeah, here it is. So this is again sitting on a nice support. This is the same support that we were following, right? So see this, beautiful, which means that there is so much pressure from the bulls that the price pushed up and it maintained the support, right? So if I took a call over here, this is a very strong signal. Say 15-30 minutes, even 1 hour, you know. Now there was a possibility that the price might start reversing from here, but that didn't happen. So even if I took safely a 30-minute signal, 30-minute expiry, I would ITM this, right? So this is a dragonfly doji. The opposite of dragonfly doji is it's called a gravestone doji. Gravestone doji is where this is inverted upside down on a resistance level. So I don't have anything right now here, but just imagine an upside down over here, right? And the next candle opens as green, a red, which means that the price is reversing back, right? So these are important ones too. This is for me, if the body is smaller, right, and there's a long wick, I know that this is even a stronger signal. The reason being is because there's so much pressure from the bottom or from the top that there's no movement, you know, in the candle itself. Everything is just pushed up back to the starting price, right? Look at over here too. This is almost like a doji again, on a resistance point, reversal, back down. So these candlesticks give you a double confirmation of what's happening. Now I'm not saying they work 100%, right? There are cases where it is possible where you still lose a signal. For example, yesterday I know I posted a Euro JPY signal. This was a fantastic signal, I thought, right? But something really unusual happened. For the 5 minutes, all the assets went berserk, you know, just for 5 minutes. So this is what happened. This is a nice support. I was waiting for some sort of confirmation over here, right? Now I made a mistake. I I gave a signal right here before this even closed and this started, this opened, right? I made a mistake by giving a signal beforehand, thinking it's going to maintain this support, and I OTM'd this on a 5-minute. But if I had posted the same signal for 10 or 15 minutes, I would have ITM. So very unusual. This does not happen very usually, because sometimes if the support is broken or something, the price usually stays down for some time, it does not come back up in the next 2 or 3 minutes again. So this was kind of little unusual, and things like this happen in the market. You have to be prepared for that. Now one more, let's look at USD CAD. This is another ITM signal I posted yesterday. I think there was just that one OTM for Euro JPY on a Friday, and there was maybe a few others early in the morning, but this USD CAD was another very good signal, I thought, and I had OTM, but let's look. This is very interesting. Now see how many times the price has touched. 1, 2, 3, 4. So I drew a line over here, right? The price bounced off from this point. It broke this resistance, went up, 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 and I know that the price is not going to keep going up. There has to be a point where the price is going to stop and reverse a little bit. So I chose this point, even though it's not a major resistance, just touched twice. Let's go back and check. Actually, yes, one more time over here. So this was again a fairly good resistance point, and I gave an SR of 824 for 15 minutes, and I won. I won the signal. But what happened was, instead of the price staying down, it went back up. You see, now a hanging man or a hammer usually detects there's a reversal happening, right? So when something like this happens, usually the price stays down, but that didn't happen. The next candle opened almost on the same level, and it started breaking the resistance slowly. So that was when there was a call opportunity over here, and we would have won this 15-minute expiry. Now if I went longer, this would have been a very, very close call. Look where it ended almost close to that SR here. So just remember that on support and resistance points, if you are not sure when to take a signal, or you missed the SR, you wait for that candle to close, and you wait for the next candle to open, and and look at the candlestick, how it's looking. Does it look good to you, in the sense, does it look like it's gonna stay up, or it's gonna come back down? So you got to make that judgment. Look at Euro USD again. Yeah, okay, see, this is a resistance point over here. Why this is a resistance? Because the price jumped off over here in this area a little bit, not a lot, but it did. Here it maintained, and look at here too. Now here was kind of choppy, right? In the sense, the price touched here, came back down, went back up, down again, up. But this candle confirms. Let me zoom in a little bit here. This candle, right, gives me a double confirmation that there is going to be a reversal happening, and the next candle opens red and it stays down. There you go, 15 minutes, you win this signal. So I don't want to confuse you by giving you too many names. If you actually Google candlestick patterns or reversal patterns, you'll see a lot of different terminology. But I like to keep things simple and understand the basics, right? The basic ones are dojis, gravestone dojis, or dragonfly dojis, anything that have long wicks on a support, right, or on a resistance, are an indication that there is a reversal happening. So guys, I hope you learned something today. Put this into your practice when you start your trading on Monday. And if you guys come up with some good signals or you see a good opportunity, let me know, right? And you can trade. My next webinar will be based on analysis. So basically, people who missed my NFP webinar due to technical issues can attend, and also others. So I'm gonna have a session, 2-hour session based on analysis. You will be analyzing with me, and we'll look for opportunities, and we'll ITM 5, 6, I don't know, 8. In those 2 hours, we'll see how many signals we can get, right? So it's going to be interesting. See you guys. You have a good weekend. Let me know what you think of this video. Don't forget to post your comments. And I'd like to thank Michael Freeman for allowing me to do this, giving me an opportunity to share my knowledge with you guys. Okay, cheers, have a good weekend, take care, bye for now.